It is that time again. Sunday has rolled around and it's time to review the weekly position on BTC. In this video, we're going to be taking a look at Bitcoin on the weekly time frame, going back into the daily and seeing if there's any snippets of intel for what may lead us into next week. As I get into the video, if you find it useful, you know what to do. Smash that like button. If you're new, subscribe. Don't forget to join us in Discord. Let's get right down into the analysis here for Bitcoin. So, here we are. This is Bitcoin paired up with USDT. On the weekly chart, Binance is the data source. And as you can kind of see, we have obviously spurred to the upside. We've seen some pretty significant gains. Nothing that we haven't really kind of been talking about quite a bit over the last few weeks. But we can see here it's 100%. Okay, so we have moved up very significantly on Bitcoin's price. And there are a few things of concern on this weekly time frame. So obviously we're overbought. We talk about this reasonably often. So we've been up here for 77 days. So when this one closes, we'll start next week, which will put us at 84 days. And we can see that actually 77 days is a pretty good amount of time to be up in this overbought range where we start to see momentum shifting to the downside. So at the moment we've been up here for quite some time. We are at 100, the maximum level on the stochastic RSI for overbought. Okay, so we know that we're right up there and we have been up here for quite some time. Okay, so we know that there's going to be a downward movement because we have to cool off. We can't go up forever. You have to have some natural corrections. Okay, so we know that that's something that we need to kind of consider. Now, if I zoom out, we can obviously liken this, and I've likened this to the 2019 rally quite a few times. That was a 342% move. Okay, and we're up in the overbought range for 119 days. So it's possible that we do stay up here for a bit longer and we mirror this. But as I said previously, we're about 2 million Bitcoin short on the volume versus these two pumps, right? This one has 2 million more Bitcoin being transacted upon than this one here, okay, for the same time period. I'm not saying the entire thing, just for the same time period from bottom for X amount of days, basically the 1st of January 2019 through to yesterday, which is the 15th of April. And again, the 1st of January 2023 through to the 15th of April. We're 2 million Bitcoin short. Okay, so we know that there is less Bitcoin being transacted upon now than there was previously, yet we've done the same percentage points that we had done previously during this initial run. So we've got a very similar setup, right? Makes you feel really bullish and gets that FOMO driving, but we know it's not really being backed by any decent volume, and that is a concern. Okay, so we know that we've got these similar movements. We know we've done pretty decent gains. We know we're overbought, and we've been overbought for the average period of time. Obviously, timing the market is incredibly difficult, so it could turn at any point is kind of my sense here. Now, the other thing that we have drawn on here is the moving averages, the 100, 200, and the 50. Okay, so we can see here the yellow line. If I come into my settings, this is a 50 EMA. It's based on, a 50 SMA, simple moving average, based on closed positions. Okay, and then we have our kind of teal line, which is a 200 SMA on closed positions. Now, why have I drawn these up? Because these are commonly used for your golden crosses and your death crosses. Okay, and what do we see inside our data here that is of interest? Well, we can see right here a death cross. Okay, this death cross occurred in February, and we did pull down, and then we surged back up again. And that surge to the upside is very unnatural, in my opinion. In fact, most of these movements to the upside are very unnatural, in my opinion. But we do see here that we have a significant surge above these levels, right? Even though we had that death cross, and there's no golden cross on the weekly time frame to be seen here. So again, we have to kind of read into that as we will. Now, if I take those off and throw on our EMAs, we can see that the 200 EMA and the 50 EMA, right? The white line is the 200 EMA, the red line is the 50 EMA. We're above both of these at the moment. This is usually historically a pretty bullish movement. We have to kind of consider, though, that there is an interesting movement with our 200 EMA. For the most part, our bear market started way up here in November of 2021. We can see that we broke the 200 EMA over in June 2022. So it took quite a period of time to break this area. We found it as resistance. We found it as more resistance. So we found resistance in August 2022. We found it as more resistance over here in early February 2023. 3, we broke past it. We haven't come back down and back tested it or anything like that. Are we going to stay above it? I don't know. It's an interesting one. I feel that this is a heavily manipulated market at the moment with an unnatural surge to the upside. And this is something that we can note through smart money concepts with the amount of fair value gaps that have been left behind, which is very unusual activity, considering we also have the on-chain data suggesting other things are occurring. Essentially, retail is coming in and large smart money is coming out. So to see this move to the upside, it has just allowed FOMO from retail investors and liquidity to get created for larger institutional investors and billionaires, multimillionaires to exit their positions. So to me, it looks very much like this is going to turn on us and it's going to get quite nasty. But yeah, we'll see how that kind of goes. Now, in terms of where we are with our Gaussian channel, we've gone green. Green on the Gaussian channel is pretty positive. We are above the midline here, okay, and we've closed above it probably 3 times. I can't imagine that we're not going to close above it here, okay, but we are still inside the Gaussian channel at the moment. Now, historically speaking, the Gaussian channel has been a fantastic tool for being able to identify the bear markets and the bull markets. If we closed inside the Gaussian channel whilst we're above it, so we're above, we come in, close inside it, we're bearish, we go into a bear market. And likewise, when we're underneath it and then we close inside it as we move up, then that's going to signal a bullish market. Historically speaking, that has what's been going on. However, I just don't think it's going to play out that way this time around. I could be wrong. Maybe this is exactly what's going to happen. Maybe the Gaussian channel continues to be a solid rock when it comes to being able to predict the bullish and the bearish markets. I'm just not convinced, considering everything that is going on chain, everything going on with the global economic climate. It does, to me, doesn't feel that it's very natural. Now, the high line here, in order for us to close above the Gaussian channel and get out of it, would be $31,848. So closing above that level would signal that we are done with the bearish market from a Gaussian channel point of view, and we can, think about those gains. But nothing moves in straight lines, and I do think the natural correction to the downside has to be had. And when we take a look at previous bullish markets, we move up and out of these areas, and we do revisit them. We do come back in, and we move back out. Now, this was all driven from the pandemic back in 2020. Is that something that we're going to see again? I mean, if we were to think about this, October, November, down here, there really wasn't too much around the pandemic at that particular point. So maybe we do close back inside here. And this was actually, a signal to say that the Gaussian channel isn't that bullish or bearish market. It will be interesting to kind of see how it plays out when things really start get going. So ultimately, the Gaussian channel is what it is at the moment. So where are we looking? Well, we're looking at some interesting resistances right now. We can see these right in here. Okay, I'm just going to draw this in right here. Pull it across. Okay, so this is basically 28,880 to 31,848. Approximately, we're right inside there now. Previous area of demand turned in resistance. Is this now going to be where we turn and find this as resistance again? It's going to be interesting to kind of see. If people were buying previously up here in May 2022, they can now get out cost neutral. Is that going to be enough to see a downturn in the market? It's going to be interesting to see how that unfolds. Ultimately, this closed position on Bitcoin is not massively important, not unless we can get above that kind of 31,800, more towards the $32,000 level. If we can do that, then we might be in a more meaningful position. But the weekly close, I don't think is overly that important for this particular week, but it could be setting us up for some interesting things next week and the week after that. Now, as I come down into the daily chart for smart money concepts, we can see all of these fair value gaps. And this is really one of those concerns that I have. It's unusual that we're going to stack up these fair value gaps and not come back down and fill at least a couple of them. So I think we have to be thinking about equilibrium on this daily chart. We have to be thinking around $22,000, maybe even coming down a little bit lower towards that $19,000 level, just to fill out those gaps, but also retest some of these areas that we just haven't retested for quite some time. We are bullish here with a bullish structure on the daily, but we think a natural correction is something that has to happen. Now, when we take a look at this on the daily chart, outside of smart money concepts, higher highs and higher lows, we know that this has a tendency to break down. So we don't want to get too comfortable, too confident. We can see this time and time again. Whereas what we really want to be looking for is the opposite. We want to be seeing a move where we have lower highs and lower lows, because these are the ones that have that bullish movement to the upside, right? You can see these again time and time again, lower lows and lower highs breaking upwards. So where we are right now is a bit of a bearish setup on our daily, that basically is telling us that we might be looking for some of those fair value gaps that we can see here getting filled out, which then brings me back to our weekly time frame and thinking that this may actually be our resistance that we're likely to hit, and we're likely to see that move to the downside, which would then pull us away from that idea that we're just mirroring what happened here in 2019. Not only are the volumes short, not only are the participants vastly different, right? We know that in order for a bear market low to come in, we had to see the Kraken size wallet, the 10,000 Bitcoin or more wallets had to come right down. We also had to see whale investors coming in down here, and we also had to see retail investors selling into this final move to the downside. Whereas what we've got going on right now is whales are coming out here, right at the very bottom. They've been selling. Okay, Kraken size wallet is still accumulating all of this, they've been buying it, and our retail investors are all buying this, right? There's no position here that's allowed for our whale investors to actually invest in Bitcoin. They've just been distributing their Bitcoin to retail investors. They've been doing this for quite some time. In fact, they've been doing it aggressively pretty much from this peak up here at $48,000. They've been doing nothing but selling their Bitcoin. So thinking to ourselves, how do they get into the market? If they sold the June lows, they sold the November lows, where are they going to be buying? They're going to be looking at potentially buying, in my opinion, a lot lower. I still have conviction on that $13,000-14,000 Bitcoin, and the fundamental analysis, the actual understanding how markets work. You know, there's a buyer and there is a seller. Okay, who is going to be selling their Bitcoin and who's going to be buying the Bitcoin? At the moment, this pump is being driven from retail money, but how sustainable is that under the global economic climate that we're currently in? I don't think it's that sustainable. So at some point, these retail investors are going to come out of their positions. And when they start coming out of their positions, the billionaires are going to be starting to come in, laddering into their positions, buying up all that cheap Bitcoin that they were selling at an expensive rate to the retail investors. And I think only when that happens can we really get confidence in a bullish market. But you know, that's my 2 cents on it. What's yours? Let me know in the comments down below. I'm going to leave this video there. If you found it useful, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord. And guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.